Hello everyone, a very good morning. Welcome to the JAIIB November 2025 Power Pack Marathon class for Module B. In the previous session, we completed the Module A in one shot. We discussed the MCQs, numericals, case studies. Today, we'll be practicing the questions from our Module B. Module B, which is the most important module of our RBWM paper. It holds the highest weightage, around 30 to 35 mark questions come from module B itself. Also, it is the lengthiest module. So let us start. We'll be following the same thing. You'll be seeing questions on the screen. I'll give you 10 to 15 seconds to answer, and then we'll be discussing the correct answer. I want all of you to be active and answer these questions. So let us start with the first question for today. How is an unclaimed term deposit treated after its maturity? So, the Unit 8, important retail liability products, is a very important unit. And under it, the term deposit, time deposit, or fixed deposit is a very important topic. So, how are the unclaimed term deposit treated after its maturity? It is automatically renewed for the same period. The interest is increased as a penalty. The deposit is considered void and forfeited by the bank. It attracts an interest rate applicable to the savings deposit. Term deposit being matured. Let's say the term deposit was created for a 10-year period. 10 years have passed, but no one comes to claim the deposit, right? So, what will happen in this scenario? What should be the correct answer? A, B, C, or D? The correct answer here is D. It attracts an interest rate applicable to the savings deposit. So, overdue deposit means term deposits which are not withdrawn on maturity dates, and notice money which is not withdrawn on the expiry of the notice given. The overdue deposit is a demand deposit now. It becomes a demand deposit now. So the period for which it remains overdue, it will attract the rate of interest applicable on the simple fixed deposit, right? On a simple demand deposit, not a fixed deposit, on a demand deposit. All right. So the correct answer is D. What are the periodic updation intervals for KYC in banking based on the customer risk categorization? Every 2 years for the high risk customers, every 5 years for the medium risk customers, every 8 years for the medium risk customers, or every 10 years for the low risk customers. Now, the deposits also require re-KYC. KYC is done when the account is opened. Re-KYC is done periodically to verify the identity of the client, if there are any changes in the address or any other important information, it has to be done again. So, what is the time period for it? The correct answer is B, 1, 3, and 4. It is done once every 2 years for the high risk customers, those customers that have a high risk. More frequently, the re-KYC will be done. For the low risk customers, every 10 years, and for the medium risk customers, it is every 8 years. All right, so this is the correct answer. This risk depends upon how much exposure does the customer has, what is the uh, behavior of the customer, is the customer involved in any money laundering activity or any terror financing. These will increase the risk of the customer. All right. Next question, what differentiates bill finance from demand loan and term loan in the traditional credit schemes? Bill finance is self-liquidating. Demand loan and term loan do not require collateral. Demand loan and term loan have indefinite repayment periods. Bill finance does not have a definite repayment period. So this is a very tricky question. it comes under overdraft. Like overdraft is to allow credit for a short period. Likewise, the demand loan, term loan, bill finance, these are also credit schemes to meet the specific credit requirements of the borrowers in their business, or let's say they want to purchase machinery and other requirements against their receivables. So bill finance is self-liquidating, but the realization of the bill purchase discounted for the borrower, it is done. For the demand loan and term loan, they have a definite repayment period. So the correct answer is A. Bill finances self-liquidating. Demand loan and term loan, they have a definite repayment period, not indefinite. A is the correct answer. For a bank to engage in para-banking activities through a subsidiary company, what is a necessary requirement? Para-banking activity means when the banks, they act as a broker or they sell other party products or third party products like mutual funds, insurance schemes. They can do it either departmentally or subsidiary. Also, if they set up a subsidiary or a joint venture, that also they can act as a broker or with risk participation. These are the options. So when they are engaging in the para-banking activities through the subsidiary, what is the necessary requirement? Compliance with the international banking standards, joint venture agreement with a foreign bank, prior approval of RBI or a minimum set capital reserve as per the Basel III norms. So when they are engaging in the para banking activities departmentally, they do not require RBI approval. But for setting up a subsidiary or joint venture, they require prior approval from RBI. Also, the terms and conditions are different. For the with risk participation, the minimum paid up capital requirement after they invest in the subsidiary, what should be the capital, all of these things are different. 1000 crores, 500 crores, respectively. Okay. Which statements accurately describe the augmented stage in banking? So, in banking, there is a core product or the generic or the basic product. Then we have the expected product, then we have the augmented product, and finally we have the potential product. The potential product. When we are talking about augmented product, which of the following statements are correct? It involves voluntary improvements to enhance the product value. It is focused solely on the basic functions of banking products. It includes additional features that may not be explicitly requested by the customers. It represents the most advanced stage. See, when we are talking about the base product, the basic generic product, it is the core product. The standardized products like a savings bank account. Expected product is something that the customer expects, their minimum purchase criteria. Like along with the savings bank account, the customer would want a debit card or a credit card. They would want periodic updation of their passbooks, a checkbook. These are expected product. Augmented products are the value added product. Let's say the customer along with the savings account is offered a insurance product. It is a value added product. Or with a home loan, they are offered an insurance, home insurance. So these are voluntary improvements that enhance the product value because the generic product is same across all the competitors, all the banks. So they add value so that the customers, they pick our particular product. It is not solely focused on the basic functions, that is the core banking. It includes additional features, yes, but the most advanced stage of product development is the potential product. A product that would have future demand. A future demand. So the correct answer should be D, 1 and 3. What constitutes the basis for assessing a person's credit score? What is a credit score? It is basically a statistical analysis done. A score between 300 to 900 is allotted on the basis of this analysis, which shows the credit worthiness of the customer. So, what is the basis for assessing or preparing this credit score? The individual's income level and savings, past credit dealings like home loan, auto loan, credit card usage, person's educational background and employment history, dealing in the credit products such as personal loans and overdrafts. Credit score is built on the past behavior. True. It is built on the customer's repayment history, also on the customer's portfolio. Does the customer have a good product mix or not? Or the customer is only availing credit cards? Has the customer been applying for too many credit cards? Is the customer over leveraging themselves? The usage of the credit card is also important. However, the person's educational background and employment history is not important, right? Similarly, the income levels and savings is not important. Important is the past dealings and the dealings in the credit product. Longer credit history is better. A good product mix is better. Past dealing, if there are any aberrations, is it genuine or is it willful, default or delay in the repayment? All of these things are checked. So the credit information companies, they take this information from the credit institutions, the banks and financial institution. They prepare this quantitative score between 300 to 900. A higher score is definitely better. What does a higher score in credit scoring model indicate? A score, let's say, above 700, a higher probability of default, a lower probability of default, increased wealth of the individual, or better financial management skills. A score, if it is on the lower side, the negative signs would be there. The customer would have defaulted on the previous loans, delayed in the EMI payments, over leveraged in the credit cards, too many applications for credit card. So that would be a higher probability of default. But a greater score, a higher score would mean that the customer is a safe customer. They have paid all the previous dues, no unpaid dues are there. Also, they have been paid on time. The credit card is utilized only for necessary shopping, not unnecessary, not frequently. Right? So the correct answer should be B, a lower probability of credit. A customer that has a higher score, the chances that the default on the loan will be less as compared to a customer with a lower score. Now, here's a case study. Amit, a young professional, applies for a home loan. Despite earning a stable income, his loan application is rejected due to a low credit score. On reviewing his credit report, Amit finds that he has multiple recent loan inquiries and several short term credit accounts. Additionally, he had delayed a few credit card payments. Amit consults a financial advisor who explains that frequent borrowing and late payment negatively impacts the credit scores. The advisor suggests maintaining financial discipline and avoiding excessive application. See, if I approach a bank for a loan and the bank rejects my loan application, I can ask for the reason. If the bank says the reason is a low credit score, I can ask them for the control number. This control number is generated whenever the bank takes out the credit information from the CIC. All right. And I can use that control number. I can go to the website of the CIC and see exactly what was the reason for the low credit score. Control number, which is a 9-digit unique number. This is known as troubleshooting credit score. Also, it is mandatory that a free full credit information report, free full credit report should be given by the CIC to all the customers without any charge once a year. From there also I can check, right? So if I see that there are some reasons because of which the credit score is low and the reasons are wrong, let's say identity theft, confusion in name, I can apply for the correction. Otherwise, I can take steps to improve my credit score. All right. So, which of the following best explains why Amit's credit score is low? Limited credit history, not taken enough loans, frequent loan inquiries, multiple loan applications, strong credit risk, or high savings balance. The correct answer is over here. He has multiple recent loan inquiries, several short-term credit account. So the correct answer will be B, frequent loan inquiries. The customer is frequently applying for too many loans. I hope this is clear. What is the consequence of not maintaining the minimum balance required for a current deposit account? The account will be closed immediately. No interest will be paid on the account balance. Penalty is charged. Overdraft facility will be automatically activated. See, under the CASA deposits, the current account pays zero rate of interest. Savings account pay a low rate of interest. Current account is basically for the business class. Savings account are for the individuals. Current account requires a higher minimum account balance. Savings account zero or low balance is required. If, however, the minimum balance required is not maintained, then what will happen? A penalty will be charged. All right. Current account is a non-interest bearing account. It requires a higher minimum balance. Penalty is charged if it is not maintained in the current account. All right, overdraft facility is the most important facility in the current account, but bank charges interest on the short-term funds or overdraft. It is of a continuing nature. The main objective is to enable businessmen to conduct their businesses. Why? Because there's no restriction on the number and amount of deposits, no restriction on the number and withdrawals made from the account, as long as the customer has funds in their account. All right, so this is the correct answer. In opening a current account for individuals, what precautionary measure should be taken in the operational instructions section of the account opening form? So, when we are talking about the current account, who all can open a current account, the documents required for them, these are the important topics, right? So, joint accounts can be opened, sole proprietorship firm can get a current account, partnership firm, limited company, even an individual. But the column meant for operation instructions in account opening form for the individual should be crossed as a precaution. It should be crossed so that we can prevent any subsequent misuse. Now, joint accounts can be operated as per the instructions, either or survivor, anyone or survivor, former or survivor. The proprietorship firm will tell the person the checks is to be signed in the name and style as the sole proprietor. Partnership firm will mention the for and behalf of firm's name and the signature of the partner. Limited company, same. For and behalf of the company's name and signature will be of the directors or the authorized signatory. But for individuals, it will be crossed out. How are inoperative accounts, current accounts defined and treated by the banks? Accounts with no operations for 2 years with incidental charges applied every half year. Accounts with no operation for 1 year, annual charges. Accounts with operation but without significant balance. Accounts that have been flagged for suspicious activities. How are the inoperative current accounts treated? Inoperative. So, in those accounts for 2 years, there have been no operations, no deposit, no withdrawal. Those are treated as the inoperative account. Banks will recover incidental charges every half year to the debit of the inoperative account. Later on, the customer they can file the application and get it operated again. Operative after the bank is satisfied. Fresh KYC documents will be obtained, duly verified. What are the requirements for a minor to open and operate a savings bank account? Now, under the Indian Contract Act, minors are not competent to enter into a valid contract, but banks allow minors to get a savings bank account in their sole name, as well as when the account is held jointly with their guardian. So the minor should be at least 10 years old and able to read and write. The account should be jointly operated with a guardian. The minor can operate an account without any supervision if below 10 years. A checkbook facility is automatically provided. See, checkbook facility cannot be rejected if a request is made. If the minor account, a request is made for the checkbook, only then it will be given, not automatically. If the minor is under the age of 10 years, they cannot operate it individually, right? It has to be with the guardian. But above 10 years, able to read and write, they are allowed to be the sole operator of the savings bank account. All right. So this is the case of a minor. Below 10 years, if the minor is there, then the rules are different. Also, no overdraft facility should be given in the savings bank account of minors held either singly or jointly with the guardians. All right. Okay. For those minors below the age of 10 years, accounts in their sole name can be opened. Just that the account should be operated by the natural guardian. What is required in terms of the PAN or the GIR for accounts of minors? If the minor's income is not chargeable to the income tax. The minor is earning income but not chargeable to income tax. So what is required? The PAN or GIR of the minor is mandatory. Father and or mother or guardian, their PAN or GIR number can be taken. Declaration form number 6061 from the minor is always required, or no PAN or GIR information is required for the minor. See, if their income is chargeable to income tax, then the minor's PAN card will be taken. If not, then the parent, father, mother, guardian, their PAN number will be required. All right. Checkbook facility can be provided on request if she or he is a literate, that they are capable of taking all the necessary precautions in respect of issue and safe custody. Also, the checkbook, if it is not issued, withdrawals will be permitted as per the normal other accounts. In such cases, passbook will accompany. The maximum balance to the credit shall not exceed rupees 1 lakh in the minor's account. All right. However, for the accounts of minors of 14 years and above, there's no limit of maximum balance. Which type of account operation facilities not operate provided to an illiterate person? Checkbook facility, ATM card, joint account with a literate close relative, or both A and B. See, banks, they have been advised that illiterate persons should also not be discriminated with. However, a checkbook facility should not be provided. All right. No checkbook facility should be given. Joint account of an illiterate can be opened with a close literate father, son, husband, wife. Even the account for two illiterates can be opened. Jointly, it will be operated and it will be held. Right? But a checkbook facility will not be granted. What are the terms and conditions for opening a joint account for two or more illiterate persons? The joint account holders must be close relative and operate the account jointly or by survivors. Checkbook facility is provided. So I already told you it is allowed to open a joint account for two illiterates, but checkbook facility will not be given. So only one is correct. All right. Again, they should be close relatives. Cousins are not allowed to get a joint account with illiterates. And when they are coming for withdrawal or they want to make any operations, they have to do it jointly, not by any one person, but all of them. What special measures are taken for the bank account of persons who cannot sign due to the loss of both hands? So, handicapped person, if they are unable to sign, there are different provisions to provide them the banking services, right? Simply the bank branch will obtain their photograph. The handicapped person may be requested to put her or his toe impression on the relevant form, or they can also give a suitable power of attorney to another person. The attorney may sign the form on their behalf, right? They can also open a joint account with her or his relative. So a mark including toe impression is accepted as a signature. All right, so if they have lost both their hands, then toe impression can also be taken. Which non-individual entities are allowed to open the savings account as per RBI guidelines? Government departments relying on budgetary allocation, primary cooperative credit societies financed by the bank, municipal corporations or self-help groups, registered or unregistered. See, savings bank account are only for individual entities, but a following categories of non-individuals are also allowed, like the primary cooperative credit societies, KVIBs, APMCs, societies under the Societies Registration Act, companies governed by the Companies Act of 1956, licensed by the central government, and they do not add to their names the term limited. Government departments, development of women and children in rural areas, self-help groups, and even the farmers clubs are allowed. However, government departments relying solely on budget allocation or municipal corporations are not allowed to open a savings bank account. Similarly, the current account can be opened for the non-individual entities. However, for the certain categories of non-individual entities, it cannot be opened. Like government departments, depending on the budgetary allocation, municipal corporation, panchayat samiti, state housing water and sewerage departments, any political party. Whether such concern is a proprietary concern, where the political party or any trading business has a professional concern. So the correct answer is D, 2 and 4. What are the conditions imposed on RBI for setting the interest rates on savings deposit? Now, the deregulation of interest rate has been done with effect from 2011. Previously, the savings bank was regulated by RBI. Now, RBI deregulated the interest rate that is to be paid by banks on the domestic savings bank deposit. However, up to 1 lakh rupees, if the savings bank deposit has up to rupees 1 lakh, each bank will have to offer a uniform interest rate. And for the savings bank deposit over 1 lakh, differential rate of interest can be provided. But the differential rate of interest should be uniform within or between the customers that get a savings deposit, which is accepted on the same day at any of its offices. So between two customers, the bank cannot differentiate. So the correct answer is 2 and 4, option B. All right. How do the banks typically calculate interest on the savings deposit now? Annually based on the minimum balance, monthly on the average balance, quarterly on the daily product basis, or biannually. So these are all the fact-based questions, factual questions. And these questions, they contain the facts that you need to remember. So here on the savings bank account, banks typically calculate the interest on quarterly daily product basis, right? So banks are normally paying interest on the savings bank deposit at quarterly rest on a daily product basis. All right. What is the impact of penalty on the interest rate in case of premature withdrawal of an FD? See, RBI has said that banks, if they want, they can reject premature withdrawal. However, banks in practice, they usually allow the customers to make a premature payment. In such cases, the interest is paid at the rate applicable up to the period the FD remained with the bank, less the penalty. So the interest rate for the period minus the penalty, this will be paid on premature withdrawal. So let's say the FD is made for 5 years at a rate of interest of 8% per annum. right? And the customer makes a request for premature payment after 2 years. So how will the interest be paid for the 2 years? It will be 5% minus 1%. So 4% on the principal for the 2 years, the premature payment will be done, right? So the interest rate is reduced by the penalty amount. Now, there's another important concept. An FD can be a cumulative FD or a compound FD, and the second type is a simple FD. So, if I want that the interest, whatever is coming out of the FD, it is reinvested into my FD, that is a cumulative. So, now the principal plus the reinvested interest will be used to calculate the interest, right? On the other hand, I can want that the interest whatever is arising be credited to my savings account or be sent to me by a check. Then it is known as a simple FD. So remember the difference between compound FD and simple FD. When the interest is reinvested, it is compound. When the interest is paid every quarter, it is simple. What is the TDS rate on interest from time deposit if the depositor has furnished their PAN card? How is the tax deducted at source by the bank? 10% TDS if the PAN card is furnished, 20% irrespective of the submission, 5% for all the types of depositors, or 20% if the PAN card is not submitted. So TDS is deducted on the interest on time deposit, right? Where the total interest paid or credited on all time deposits in the name of a single depositor, whether singly or jointly, is more than 50,000 rupees in a financial year, right? Then the TDS will be deducted. This is for those individuals who are senior citizens, and in case of depositors below the age of 60 years, if the interest accumulated is more than 40,000 rupees in a financial year, TDS will be collected. Now, if the depositor has furnished the PAN card, then 10%, and if they have not furnished, then 20%. So the correct answer is 1 and 4, option B. Everything is given here in the explanation. So download the PDF and use it for your revision. What is the usual range for the percentage of loan banks offer against the value of a fixed deposit? 100 to 110%, 50 to 60%, 80 to 90%, 30 to 40. So this is an additional feature, add-on feature to help the customers overcome the temporary requirements for funds. Banks normally offer loans against FD up to 80 to 90% of the value of FD. The interest that is charged on the loan is higher than what is being given on the FD, right? 1 to 2%. It normally varies from bank to bank. Margin is retained to protect the additional interest. Now, on the maturity of the loan, if the customer does not pay back, the bank will adjust the funds in the FD. Whatever is remaining will be paid to the customer. Each FD will be treated as a separate account, right? Accumulative fund will not be treated for giving out loan. The receipt is known as the fixed deposit receipt, and it has to be surrendered to the bank. Also, banks do not encourage advances against third party products. And as per RBI guidelines, any advance is strictly prohibited against the time deposit of other bank. So, own bank time deposit advances can be given. Under what condition do banks generally not provide advances against FDs that are less than a year old, against third party deposit receipts except under special circumstances, against FD with high interest rate, against the recurring deposits unless they have been in existence for at least 1 year. Now, what is a recurring deposit? Recurring deposit means every month, every quarter, or any other time period, I can give the instruction to the bank that you deduct some particular fixed value from my running account and you create an FD out of it. That is a recurring deposit. All right. Other things between the FD and the RD are the same. The rate of interest offered, or penalties, premature payment, unclaimed deposit, all of these things remain the same. So the correct answer is B, 2 and 4. All right. Third party deposit receipts are not accepted, and recurring deposit unless they have been in existence for at least 1 year. What are the correct answers? In special cases to valuable clients, third party deposits will be given, but only in special circumstances, right? Advances against the deposit receipts solely in the name of minors will not be considered. In case of advances against RD, facility will be allowed only after the RD has been in existence for 1 year. All right, so the correct answer is 2 and 4. What is the significance of RBI's rule on overdue FD? Overdue FD means it remains unclaimed. The time period has relapsed, the account has matured, but no one comes to claim it. So, what will be the impact? It mandates automatic renewal of the overdraft FD. It guarantees the same interest rate post maturity. It ensures unclaimed FD post maturity earns some interest. It requires the banks to contact customers for the FD renewal. See, automatic renewal facility has been given now. So if the customer has availed the automatic renewal, they need not keep a track of when the account is maturing. It is usually renewed for the same period as it was created. Right? So the correct answer is C. It ensures unclaimed FD post maturity earns some interest. So it will earn interest on the savings bank deposit. Whatever interest is being paid currently on the savings deposit account will now be applicable, will now be paid on the overdue FD. Similarly, when the FD is maturing on a Sunday or holiday, non-business working day, then also what will happen? In the intervening days between the day of expiry and the specified term, the savings deposit rate will be paid. All right, on the original principal amount. Which when should form 15G or 15H be submitted to the bank? At the time of opening the FD account, once in a lifetime for each customer, every 5 years or annually, generally at the beginning of the financial year. Those who have income within the accepted limit can intimate the bank to not deduct TDS. For this, a form has to be submitted at the beginning of the financial year. 15H is for an individual who is of age 60 years or more, that is senior citizens, and 15G for all others, that is below 60 years, and their total income is not exceeding the maximum amount not that is chargeable to the income tax. All right, it has to be submitted for every financial year. So the correct answer is D. Generally, at the beginning of the financial year, this form will be submitted. 15G and 15H. 15H for senior citizen and 15G for every other. Below the age of 60, Hindu undivided family individuals, they will file the form 16H. What are the current income exemption limits for different age groups for submitting the form? 15G and 15H. 2.5 lakh for the individuals below 60 years, 3 lakh for senior citizens, 5 lakhs for super senior citizen, or 5 lakh for individuals irrespective of their age. Irrespective of the age is definitely wrong. No exemption, all individuals have to pay. No. TDS can be exempted. 1 lakh for individuals below 60 years, 2 lakh for senior citizens, and 5 lakh exemption for the super senior citizens. So obviously the correct answer is A. This is as per the tax slab, the new tax regime. All right. What is the method used for breaking the FDs in the reverse sweep facility? Now we also have the two-in-one account, which is a combination of the savings bank or current account and the FD linked account. And it works under two principles, the auto sweep facility and the reverse sweep facility. Auto sweep facility, if let's say the maximum balance allowed in my savings account is 50,000 rupees. At any point, if this increases, let's say 60,000, so the 1,000 rupees from the, sorry, 10,000 rupees from the savings deposit will be automatically sent to the fixed deposit, right? And if there's a shortfall, let's say 40,000 rupees, then 10,000 will be sent from the FD to the savings deposit to meet the shortfall. And this works on the last in, first out principle. All right, the last in, first out principle. So remember the direction and when will the direction work. Who can open a recurring deposit account? A person who is duly introduced to the bank and has fulfilled the KYC norms. Minors of age 10 years and above, subject to the bank's terms. Only the salaried individuals or only senior citizen, who all are allowed to open a recurring deposit. A recurring deposit, any person duly introduced to the bank fulfilling the KYC in their own name, they can open the account. In joint names also, amount being payable to all of them jointly or as per the operation instructions. Even a minor of 10 years and above on the terms laid down by the bank or operated by the guardian also, the account can be opened. But here the deductions are made from the salaries every month. So sir, senior citizens are not allowed, and statement 3 will also be incorrect because other individuals that are getting a constant flow of income to their account, they will also be allowed to open a recurring deposit. TDS is applicable to RD account. Is TDS collected, deducted on the interest on RD account? No, it is not applicable. Yes, similar to FDs, only if the interest exceeds 10,000 rupees or it is applicable for a higher rate than FD. So the correct answer is similar to FD, right? The standing instructions are accepted from the depositor to transfer installment. The KYC AML will be done. Installments can be paid in advance. Monthly installment, if there is any delay, penalty will be levied. So basically, all the terms and conditions remain the same. All right, in the recurring deposit, it is same as a fixed deposit. How do the banks handle access to a jointly hired locker with a survivorship clause upon the death of one of the locker hirers? So, more than one people had opened a locker and they had given a survivorship clause. Access is given to the legal heirs of the deceased hirer. The locker remains inaccessible until all the joint hirers pass away. Access is provided to the survivors as per the survivorship made. The locker is sealed until a consensus is reached. So the survivorship clause is there. Thus, access will be provided to the survivors as per the clause made, the survivorship made. All right. So accounts that have the survivor or nominee clause, like former or survivor, anyone or survivor, either or survivor, later or survivor, it has to be followed by the banks. Next question, which of the following statements regarding the beneficiary eligibility under the CLSS scheme is not correct? The beneficiary family definition under the CLSS. A married couple can apply for separate houses if both individuals meet the income criteria independently. Adult earning member, irrespective of their marital status, may be considered as a separate household. if they do not own a pakka house in their own name. The scheme excludes families owning any all-weather during dwelling unit across India from eligibility. Joint ownership of a single house by a married couple is permissible under the CLSS scheme, provided they meet. Yes. So a beneficiary family will include a couple, husband and wife, unmarried sons and daughters, if they do not own a pakka house in any of their name anywhere in India. If any member becomes an adult earning member, they will be treated as a separate beneficiary. However, when we are talking about the married couple, they are eligible together for a joint house, one house, right? And their income should meet the eligibility criteria. So, the Pradhan Mantri Awas Yojana, under which the CLSS works, the credit linked subsidy scheme, housing for all is the mission. Beneficiary family, in case of the married couple, either of the spouses or both together in joint ownership will be eligible for a single house only. Another question from the same topic. Which of the following statements are correct regarding the income criteria? Households with income up to 3 lakhs qualify under EWS, LIG between 3 lakh to 6 lakh, MIG 1 6 lakh to 12, MIG 2 12 lakh to 20. So there are four categories. Earlier there were only two, right? Later on, MIG 1, MIG 2 were added. Beneficiary family classification is the same. Income criteria for AWS is 3 lakh, for LIG is 3 to 6 lakh, MIG 1 is 6 to 12, and MIG 2 is 12 to 18 lakh. Interest subsidy is 6.5% for EWS and LIG category, 6.5%. For the MIG 1, it is 4%, MIG 2, it is 3%. The maximum loan tenure is 20 years for all. Maximum loan amount eligible is 6 lakhs, 6 lakhs, 9 lakhs, and 12 lakhs. And the maximum carpet area 30 square meter, 60 square meter, 120 square meter, and 150 square meter is there. So the correct answer is A, 1, 2, and 3. We have discussed each and every point regarding the CLSS, the Pradhan Mantri Awas Yojana, and this is a very important topic because every year questions are asked. Okay, and I have included for your reference this table as well. So go through the table, revise it clearly because questions will be asked from this particular scheme. If we talk about the central nodal agencies, we have discussed so many times NHB and HUDCO are the central nodal agencies, primary lending institutions, banks, finance commission, companies, RRBs, state cooperative, urban cooperatives, NBFCs. All of these are the important points. Rohan has secured admission to a university with an annual fee of 8 lakh rupees. He receives a scholarship of 2 lakh with a fee waiver of 50,000 per year. His lodging and boarding expenses outside the campus amount to 1 lakh 20,000. What will be the total loan amount that Rahul is eligible for? See, it says that the total annual fee will be taken into consideration, but we will exclude if they are getting a salary, the scholarship. So scholarship is removed. It is now 6 lakh rupees. Then a fee waiver is also there. It is also removed. So it becomes 5 lakh 50,000. But 1 lakh 20,000 expenses, boarding and lodging is there. So that will be added and this will increase the amount. So the total eligible amount will be 6 lakh 70,000. All right, this is 6 lakh 70,000 is the eligible amount per year. All right, I hope this is clear. When we are talking about the education loan, what all is included in the loan quantum, fee payable, examination, travel expenses, caution deposit, all of these things. When we are talking about the operational instructions, then the scholarship can be removed, right? That is all. When the processing of retail loans is done through RLPCs, select the correct statement. Processing of retail loans can be done through RLPCs, or the standardized approach can be followed, standalone approach. RLPCs are responsible for executing the mortgage formalities, especially for the mortgage backed real loan like housing loans. The role of RLPCs is limited to processing and up to the sanction of the loan, post sanction facilities, documentation, follow up. In some banks, RLPCs function as separate branches providing end to end solution, including monitoring and follow up. RLPCs do not play a role in determining the quantum of finance. In the standalone model, everything is done at the branch level: customer onboarding, doing the scrutiny, documentation, loan appraisal, sanction, disbursement, monitoring, everything. In the RLPC, there are centralized centers. The various applications are collected, sent to the RLPC. The documentation, sanction, disbursement will be now done by the RLPC. So the correct answer is C, 1 and 3. All right, the role of RLPC is not limited. It can perform all the functions, and RLPCs do play a role in determining the quantum of finance. Which of the following is a key requirement for banks in India to undertake the credit card business? A minimum net worth of rupees 100 crores, approval from RBI for the domestic credit card business, tie-up arrangement with international payment services, or a subsidiary company set up for the credit card operation. So now we are starting with the credit and debit card unit, right? In India, banks are permitted to undertake credit card business departmentally or through a subsidiary. They can also undertake domestic credit card business by entering into a tie-up agreement. Prior approval of RBI is not required for the banks that are undertaking the credit card business departmentally or in a tie-up arrangement with other card issuing banks. However, only those banks with net worth of rupees 100 crore and above would undertake the credit card business. And if they are setting up a subsidiary for undertaking the credit card business, then it would be required to get approval from RBI. So the correct answer becomes a minimum net worth of 100 crores, right? And if they're doing the credit card business departmentally, then they require approval. Sorry, through a subsidiary, then they require approval from RBI, otherwise not. Which of the following statements correctly describe the evolution of credit cards? Global evolution of credit cards. The first bank card was charged card. Yes, it allowed the international transactions. Diners Club card introduced in 1950 was the first general purpose card. The charged card did not allow international transactions. When we are talking about the charged card, it was issued by a banker, John Biggins, right? And it allowed the customers to make purchases from the local merchants in the Brooklyn neighborhood only. All right. So the first statement is incorrect, second statement is correct. Early credit card in the 1990s were made of plastic and offered revolving credit. No, they were made of cardboard. They did not involve revolving credit. Simply the customer could purchase anything from the retailer, then a cardboard sort of card would be issued. They can go it and recover. So the third statement is incorrect and fourth statement is correct. The first bank official credit card was issued by the Franklin National Bank in 1951. So the correct answer is D, 2 and 4. Which of the following statements are true regarding the credit card transaction systems? In a closed loop system, transactions are processed by multiple banks. Visa and MasterCard operate under an open loop system. American Express operates under a closed loop system. The open loop system requires no interbank cooperation. There are two options. The open loop system and the closed loop system. In 1966, the ICA was set up, which is now the MasterCard. Then the Bank America brand, Visa. These banks, they created the open loop system. It required interbank cooperation. Transaction is shared between thousands of members. Issuing bank is different from the merchant bank. But in a closed system, contract owners, they contract directly with the cardholders and the merchants that authorize and settle all the transaction. Right, so the Diners Club and Amex, these are the closed loop system. Thus, the correct answer is C, 2 and 4. 2 and 3, not 4, 2 and 3. American Express, Diners Club, Open Loop, Visa and MasterCard. American Express, Diners Club come under the closed loop system. Visa and MasterCard come under the open loop system. Right? In the closed loop system, multiple banks are not there. Only the owner and the issuing banks are there. In the open loop system, interbank cooperation is required. All right. Now a situation is given. Raj uses his credit card for the retail purchases totaling 10,000 rupees in a billing cycle. His credit card's terms state that the minimum amount due is determined as the highest amount among the following. For this cycle, the sum of all installments billed calculate to 320 rupees and Raj is not in default. What is the minimum amount due? So the minimum amount due is either 5% of the balance outstanding or the sum total of all the installments billed, the uh, overdue charges, and everything else is calculated. This is the second part. Or third part, if there's a default 250 rupees, or if the balance is less than 250, then the entire amount has to be paid. This is the minimum amount due. If I'm choosing to pay not the full bill, but only a part of it, then it will be known as the minimum amount due. In this case, the sum of all installments amount to rupees 320. So we will calculate 5% of 10,000 rupees. This is the first point. So 500 rupees, or the sum total of all the installments billed is given 320 rupees, and the default is not there because Raj is not default. Thus, the minimum amount due will be higher of the amount, that is 500 rupees will be paid. All right, 500 rupees will be paid in this scenario. So remember these points, either 5% of the statement outstanding, or sum total, or default 250, or if the balance is less than 250, then the entire amount. Higher of these, whichever is higher, will be the minimum amount due. Clear? All right. Next, based on the Maslow's hierarchy of needs, which of the following banking services best align with the physiological needs? The Maslow's hierarchy of needs is a pyramid in this form. At the bottom, we have the basic level needs, the physiological needs, safety needs, love and belongingness, the self-worth, and full actualization or self-actualization. Physiological needs will be the most basic core needs. So, wealth management services, basic savings and current checking account, personal development loans, or insurance product, the correct answer will be B. All right. Wealth management services might come under the safety needs, personal development, self actualization, insurance product for long term security, again, safety needs. So, this is how the Maslow's hierarchy works. Abraham Maslow gave the theory of motivation that says that people are motivated, individuals are motivated to achieve these needs in the different stages of their life. Once we fulfill our lower level needs, then only we move on to the higher level needs progressively. Finally, we try to achieve the self-actualization, full potential. Okay. In the context of the Maslow's hierarchy, which banking products or services correspond to the safety needs stage? Investment services for wealth accumulation, loans for home purchase or renovation, credit card luxury travel benefits, financial planning for retirement. Credit card luxury, this will come under the self esteem, that would increase my worth if I'm getting a credit card approved offering luxury travel benefit, right? And investment services for wealth accumulation might also come under the self actualization. But safety needs would be loans for home purchase, renovation, and financial planning for retirement. The correct answer is D, 2 and 4. In relation to the Maslow's hierarchy, which banking products are best suited for the customers seeking to fulfill esteem needs? Personal loans for home improvement. Personal loans will come under safety needs. Saving schemes with competitive interest rate, physiological needs. Premium credit cards will come under the esteem needs, and insurance plans will again come under the safety needs. So the correct answer is C. Premium credit card, a second housing loan. If I'm availing a second housing loan or personal loans, they will come under self-esteem. In which stage of the product life cycle the customer's awareness of the product will be more? So when we talk about the product life cycle, like this, the graph works on the x-axis and on the y-axis. Basically, when time increases, the sales and profit also increases. There are four stages. First stage is the introduction stage. Second stage is the growth stage. Third is the maturity. Fourth is the decline. And with decline comes the death stage. This is the fifth stage, ultimate. So, in which stage the consumer's awareness will be more? It will be more in the growth stage. In the introduction stage, the product is newly introduced. The expenditure will be more than revenue. The customer does not know about the product. They have no idea about the features of the product. Then what will happen in the growth stage? As time passes, the customer's awareness will increase with promotion and advertisement. Customers will also tell others about this product. At that time, the consumer awareness will be highest. Maturity will be maximum sales. Other competitors they creep in, and this will lead to decline and finally death. Select the statements that are characteristics of the first stage of product life cycle. The product is likely to break even and start generating profits for the organization. When a product is introduced, the sales volume will be low. This statement is correct. This stage, if not attended properly, will lead to product death. I think it is the maturity stage. The revenue for the products will not be sufficient. The correct answer should be 2 and 4. In the growth stage, the product is likely to break even. Break even means the marginal revenue becomes equal to the marginal cost. Beyond this, the marginal revenue will be more than the marginal cost, and the firm will now have profits. All right, in the introduction stage, sales volume will be low, insufficient to cover the cost. Match the following products with their respective product line. We already discussed there's the generic product, augmented product, expected product, and potential product. Generic product is something which is basic, core product, so it is the current account. Augmented product would be something that adds value. Expected product is passbook. The customer knows they're going to get it along with their core product. So 1C and 3B. The correct answer should be B. All right, augmented product is doorstep. It adds value. Potential product, cardless cash withdrawal. It will have demand in the future. A future product. What does payment default in managing the credit score mean? How many past accounts are due, by how many days, and by how much? How old are your lines of credit? What type are they? How Do you have a good mix or is it just credit cards? Have you applied for additional credit lines recently? So certain things lead to a positive credit score, others lead to a negative credit score. If we have too many accounts that are due, recent accounts, only credit cards, it will be a negative score. But payment default means how many accounts are due. All right. These factors impact our credit score. What are the positive signs of the credit score? It will be obviously having a good mix, not just credit card or personal loans, but secured loans as well. Then longer credit score is better, past accounts are better. We should close down the inoperative accounts, be careful of opening new accounts. We should not over leverage ourselves on the credit card maximum. All right, utilization of credit card is also important. Which of the following statements accurately describe the features of the main retail liability products? Demand deposits are known for their high interest rates. Term deposits are often locked in for a certain period during which the customers cannot withdraw. Recurring deposits are designed to help individuals with regular incomes. Demand deposits require a notice before withdrawal. Recurring deposits offer interest rate comparable to fixed deposit. So the demand deposits are not known for their high interest. It is a feature of the fixed deposit. So the first statement is incorrect. Second is correct. Third statement is also correct. Fourth is incorrect. In the demand deposit, we can make a withdrawal without giving any notice. So the correct answer will be 2, 3, and 5. The basic features, very simple question. Which of the following advantages are associated with a current deposit account beneficial for businessmen and traders? They offer high interest earnings on account balance. No. Current account is a zero interest bearing account. They facilitate direct payment to the creditors. Yes, we can use checks, demand drafts, online transfers. So this benefit is there. They restrict the number of transactions. No, there are no restrictions on the withdrawal and deposit in the current account. They provide the facility of overdraft, which is the main feature of the current account, and they are designed for savings. No. So the main features and advantages for the businessmen traders are 2 and 4. All right, it is 2 and 4. Which of the following non-individual entities are permitted by RBI to open a savings bank account? Primary cooperative credit society being financed by the bank is allowed, yes, but registered political parties for election funding are not allowed. Self-help groups are also allowed, and farmers clubs are allowed, but trading firms are not allowed. This question we have already covered earlier. Previously also, it is a more detailed version. So usually only individual entities are permitted to open a savings bank account, but these non-individual entities are also allowed. They are also allowed. The first bank card was issued in the year dash by the banker John Biggins, and it was called. What was the first bank card issued by John Biggins? The Charged card, and it was issued in 1946. Diners Club card was the travel and entertainment card, 1950, right? Formal credit card, 1951, 1966, ICA was set up. The correct answer is B. The minimum amount due on the credit card. Now, finance charges topic is important, right? Finance charges are applicable if the customer of the credit card decides to pay only the minimum amount due. The remaining portion is carried forward to the next billing cycle. And now all the new purchases, that is the new debits, previously unpaid payments, as well as the any other charge amount by which the cardholder exceeded the card limit, all of these will be there. So let's say on every second of every month the billing cycle is generated. So on 2nd of October all the purchases made between the for the month of September, 3rd of September till 2nd of October, the bill will be generated. Interest free period of 20 to 50 days usually is given by the bank. If you pay the bill within these many days, no interest will be charged. However, if you decide to pay only the minimum amount due, then this interest free period is not given. Plus, let's say the whole bill was of 50,000 rupees. I paid just the minimum amount due, let's say 25,000 rupees. The remaining will be carried forward to the bill of October generated on 2nd of November. No interest free period will be given, and everything together will be charged on the finance charges, which is quite high. Okay. Select the correct statements about the prepaid payment instruments. Closed system issued by banks for facilitating purchase of goods and services from any entity? No. Closed system PPIs can be issued by anyone, any entity, and for the purchase of goods and services from that entity only. Does not require RBI approval, but also does not allow ATM withdrawals. Semi-closed do not permit cash withdrawal. Irrespective, yes, semi-closed can be issued by banks or non-banks to be used at clearly identified merchant locations, but they do not permit cash withdrawal. Second statement is correct. All PPIs will have a minimum validity of 1 year. Correct. Banks are allowed to give a higher validity period also, but minimum will be 1 year. For the reloading and loading, the minimum and the maximum amount, where 1 lakh rupees is allowed, where only 50,000 rupees is allowed, all of these things are there in the PPIs. Under the Pradhan Mantri's Awas Yojana CLSS, which of the following statements are correct? The scheme initially targeted the EWS and LIG, but later included the middle income groups also. True. In the beginning, there were only two categories. Later on, MIG 1 and MIG 2 were added. NHB and HUDCO are the CNAs. The maximum loan amount eligible, this we have already discussed, right? We discussed in the table the maximum loan amount eligible for the different categories. And for MIG 2 category, it is not 9 lakh rupees, it is 12 lakh rupees. So the third statement will be incorrect. Beneficiary family, husband, wife, unmarried sons, unmarried daughters, this is also correct. The maximum carpet area for MIG 1 category is 150 square meters. This is also incorrect. Alright, so as per the scheme for the MIG 1 category, it is 120 square meter, and for MIG 2 category, it is 150 square meters. Alright, so the correct answer is B, 1, 2, and 4. NEFT is a nationwide payment system facilitating one-to-one fund transfer. It operates on a DNS, SFMS, STPS, or DGS. Very simple question. In NEFT, the transactions are completed in batches, half hourly, 48 batches are there. All the transactions are clubbed into the next available batch, completed within 2 hours. So it works on the deferred net settlement, and RTGS works on the gross settlement. Individually, without clubbing, without using batches, the transactions are completed. The transactions carried out by RTGS, interbank transaction, customer payment transaction, delivery versus payment transaction, all are allowed. All of these are allowed, right, under the RTGS. So the correct answer is A, 1, 2, and 3. Interbank transactions mean that between two banks the transactions are being done. Interbank, right? Delivery versus payment transaction where merchants are involved, and the customer payment transaction is also there. Okay, interbank transactions, treasury operations, customer to customer transactions, remittances from the customer to a beneficiary in the same bank as well as to any other bank, that is also allowed. RBI's account to another can also be done. All of these type of transactions are allowed in the RTGS along with the payment message. The IFTAS has been acquired by Indian Financial Technology. See, IDRBT was set up. RDIBT gave the technology solutions of the SFMS, IBCC, NFS. Later on, they were acquired by IFTAS, and IFTAS is now a wholly acquired subsidiary of RBI. You also need to remember the timeline for it, right? Like the IDRBT when it was set up, then when were the four institutions set up? IDRBT in 1996 it started functioning. The Infinet, SFMS, NFS, and IBCC were conceptualized. The NFS was handed over to NPCI in 2010. Remaining three were handed over to IFTAS, right? In 2016, which was particularly created to take over so that IDRBT can continue with its research and other functions. And the IFTAS was then wholly acquired by RBI when in 2019. All right. A computing environment is provided as a service to the customers to build their own applications that run on the provider's infrastructure. Now, if we talk about community cloud, we have the IBCC, which is the community cloud for the banks, the Indian Banking Community Cloud. It provides software as a service, platform as a service, and infrastructure as a service. So, where the computing environment is being provided, it is known as the platform as a service, right? Software as a service, whatever software is required to the end users is provided through internet. Infrastructure, the complete equipment, service, the servers, storage system, network, data, everything is provided. Here we are talking about the computing environment, so it comes under the platform as a service. All right. Select the statement that is not correct about the moratorium period in retail loans. What is moratorium period? It is the holiday period. The repayment begins only after the complete disbursement, and after that also to give a relief period, the bank gives certain period where the principal repayment does not start. The interest can be serviced. So the repayment begins only after the disbursement of entire loan. This is correct. Holiday period interest need not be serviced. In respect of housing loan, 18 months in case of construction, 3 months in case of purchase. Term loan may be disbursed either in single or multiple debit as per the requirement. So I already told you the holiday interest period is serviced during the moratorium period. Just the principal component does not start. The principal component does not start. Match the following categories of loans with their basis of classification. Now, the unit 14 and unit 16 are again extremely important. Recovery of retail loans and securitization. Recovery of retail loans, the classification of the irregular loan account, monitoring of the loan accounts, the Surfaci Act, recovery through Lok Adalat, these are the topics. So answer this question. SMA1, substandard category, doubtful category, or loan loss asset. When we classify the loan accounts under the special mention account category, we have SMA 0, SMA 1, and SMA 2. When the principal or the interest payment remains overdue wholly or partly between 1 to 30 days, it is SMA 0. Between 31 to 60 days, it is SMA 1. And between 61 to 90 days, it is SMA 2. So SMA 1 is 31 to 60 days, right? When we go to the substandard category, which has remained NPA for a period less than or equal to 12 months. So substandard category will be less than 1 year, right? It will be less than 1 year. Doubtful categories 1 to 3 years, and loss asset will be an asset which is uncollectible. Okay, so the correct answer will be C. A, D, 2C, yes, 3A and 4B. This classification is again important, you need to remember. Doubtful asset also has three categories. Doubtful asset 1 up to 12 months, doubtful asset 2 12 months to 3 years, doubtful asset 3 more than 3 years. Okay. In case of the substandard asset, a general provision of dash on the total outstanding should be made without any allowance for the securities available. The provisioning norms are also important. Loss assets written off, doubtful asset 100% for the portion not covered by the security. For the remaining up to 1 year, doubtful category 1 25%, doubtful category 2 40%, doubtful category 3 100%. For the substandard asset, a general provision of 15% on total outstanding without making any allowance for the securities available. The unsecured exposure would attract an additional 10%. That will make it 25%. Recovery of the NPAs through the award of dash is the easiest, cheapest, and fastest. It is the Lok Adalat. So Lok Adalats are established at the particular period, at particular time, so that justice can be given to all. Even those who belong to the lower income group, they are not denied justice because of their economic status. So lok adalats are established by the legal under the Legal Services Authorities Act, by the central, state, or even permanent lok adalats are also there. Okay, it is the easiest mode. The National Legal Services Authority, the Legal Services Authority of the state, District Legal Services Authority, and the Taluk Legal Services Committee under the Legal Services Authorities Act of 1987. The MIS should give following reports to the management. Management Information System, the only simple unit of our Module B. The non-moving account which has gone below the minimum balance, regular payments made, routine credit arrived, defaults on loan period. When the regular payments are not made or the routine credits have not arrived, then the MIS should give report to the management so that proper action can be taken. All right, so the correct answer is C, 1, 2, and 5. All right. What is the correct explanation for the obliger under securitization? There are certain parties involved in the securitization process. Okay. Securitization is what? Let me explain you the process. The bank makes a pool of its NPAs or even the performing asset. These should be homogeneous. They transfer these pool of asset to the special purpose vehicle. Why? To get more liquidity and for the recovery of their dues as well. The SPV will then issue security receipt to the qualified institutional buyers who are the investors. From the interest generated or the assets recovered, the investors will get their interest payment. This is the securitization. So the bank is the originator, the borrower is the obliger, and SPV and security receipts we have already discussed. The SPV is established by a sponsor. So a person who is liable to pay a debt is the obliger. Originator is the creditor, the lender, or the bank. Select the correct statements for the MRR, the minimum retention requirement. A minimum value of the loan asset has to be retained by the bank, and then the remaining they can transfer it to the SPV. So what is the MRR? For underlying loans with original maturity up to 24 months, 5%, more than 24 months, 10%. In case of residential bagged mortgage security, the MRR will be 5%. All of these statements are correct. MRR and minimum holding period. Minimum holding period means the minimum months or the days or weeks it should remain in the books of the bank before they can give it for securitization. MHP depends upon the repayment frequency to make sure that it is still a performing asset. It is, we are not transferring the project implementation cost to the SPV and to the investors. What will be the stake of the state owned banks in IDRCL? Now, the NRCL and the IDRCL has been established for the securitization to act as the ARCs. The NARCL, National Asset Reconstruction Company, it has been acquired. The assets acquired by NARCL are managed by the trust, which is IDRCL. In the IDRCL, state-owned public banks will have 49% stake, and the remaining will be with the private sector. In the NARCL, this will be opposite. 51% shareholding will be with the public sector banks, and the remaining will be with the private sector banks. Both you need to remember. All right. So in the NARCL, 51% with the public sector banks. In the IDRCL, 49% with the public sector banks. Now we are left with certain case studies. All of the remaining questions are the case studies from your module B. We'll be covering some of them, and the remaining I will give you for practice. Vivek needed a home loan of 35 lakhs and applied for the same with XYZ bank, which the bank sanctioned to him. It is payable in 360 months at the rate of interest 7.5% per annum. Calculate the EMI that Vivek needs to pay. This question was asked in the previous exam cycle. On the calculation of the EMI, how do we calculate the EMI? We have the formula. The formula is P into R into T. This is the normal formula, the simple formula. But when we are talking about this type of loan, we'll be using the compounding formula. So the compounding formula is this. P into R into 1 plus R raised to power n divided by 1 plus R raised to power n minus 1. So P is the principal amount. We will calculate the monthly interest rate. The annual interest rate is 7.5%, so it will be 0.075 multiplied by 12. This will be the monthly rate of interest. N is the loan tenure in months, which is given 360. So simply put the values in the formula. 35 lakhs multiplied by the rate of interest, 1 plus 0.00625 raised to power 360. You will be allowed to carry your simple calculators and easily you can do the calculation. So approximately the EMI required to pay will be rupees 204, rupees 24,475. All right. So this is the formula. Or else the institute can also ask you the simple formula we can also use to calculate. All right. If we want to calculate the interest that will be paid by Vivek, how much interest will be paid, then we will use the simple formula, right? EMI we already calculated 24,475. Principal plus interest we can calculate. So this is how we are going to use it. Principal plus interest 24,475 multiplied by 360. This is the whole value. And when we subtract the principal amount, the total interest that was paid was 53 lakhs and 11,000. All right, so we calculated the interest paid. We already had the principal. This is how we calculate it. It has been asked, this question from the EMI on home loan has been asked only once. So it is possible that the institute repeats it. So this is the simple formula. This question also on the credit card, how the finance charges are calculated, how the minimum amount due is calculated is also important. Miss Sneha holds a credit card of ABC Bank and the limit is rupees 7 lakh. Billing date of the credit card is 10th of every month and the interest free period is 20 days. Rate of interest is 3% per month. She bought a product online worth rupees 4 lakhs using the credit card on 12th of April. After 25 days, she paid the outstanding amount. So 12th of April will come in the next billing cycle, because every month the bill is generated on 10th. So 12th April means now it will come in the billing cycle of May. On 10th of May, the this 4 lakh rupees will be included. From 10th of May, if we add 20 days, it is 30 days, right? So this is how we calculate the rate of interest. All right. So I hope, so the rate of interest paid will be 0 because she paid within the interest free period. Okay. Yes. So the rate of interest paid is 0. Next question. You need to calculate the annual percentage rate and the effective rate. Annual percentage rate is very simple to calculate. Simply multiply the per month rate with 12, so it will be 48%. To calculate the effective annual percentage rate, this formula is used. 1 plus 0.04, which is the rate of interest, n minus 1, that is 11 multiplied by 100. So use your calculators. 1.04, and then you press multiplication button once, and then 11 times you are going to press is equal to, so 1 2 3 4 5 6 7 8 9 10 11, and then you multiply it by, it is 1.60. You also need to minus 1 from here, another point is here, so it is 1.60 minus 1.60, multiply it by 100, so that is 60%. All right, this is the annual effective rate. This also was asked around 2 3 years back, so you can remember the formula. Annual percentage rate is simply multiplying by 12, and the annual effective rate is, let me write it down for you again, it is 1 plus r raised to power n minus 1. This minus 1 is here, and then multiply it by 100. This will be the annual effective rate. Okay. Another question. The same scenario is given. She purchased a product 45 rupees 4500 using the credit card online. Calculate the minimum amount due to pay on or before the due date to avoid the penalty. How do we calculate the minimum amount due? It will be either 5%, or it will be 250 rupees, or it will be all the statements billed. Now all the installments are not given here, so we will do either 5% or 250, whichever is higher. 5% of 4500 is 225 and or 250, whichever is higher. So 250 rupees will be the minimum amount due that will be required to pay in this particular scenario. All right. Another question. She purchased the product of rupees 200. What is the minimum amount due? So if the purchase made or the transaction is less than 250 rupees, so the entire amount has to be paid. These are the options. The entire outstanding will be paid because it is less than 250 rupees. Okay. Another scenario, this is on the Maslow's hierarchy. Raj is a 30-year-old IT professional who has recently received a substantial raise in salary. He is considering various banking products and trying to determine which ones would be best for his current life stage and needs according to the Maslow's hierarchy. Based on the current situation, he has multiple needs. He wants to build a financial plan for his future, family security, look into investment. He seeks products that cater to his physiological needs, also addressing the higher level needs. So, which products will satisfy the Physiological needs. Physiological needs are the basic products, the core products. So it will be the core savings account, right? Core savings account. If we are talking about self esteem and self actualization, whether it will be home loans, car loans, retirement solution and pension plan, or loans for professional development. So one's esteem will increase, one's worth will increase if they have professional development. All right. So these questions are there. Anjali, a 45-year-old doctor, has her own thriving practice. She's financially stable and has provided for her family's basic needs and security. Now she's looking to enhance her social standing and connections through her financial capabilities. She's also contemplating ways to leave a legacy. Which product should Anjali consider to build connections and increase her social interaction? Answer this question. Social interactions come under the love and belongingness needs. The love and belongingness needs. So, what should be the correct answer? She can purchase a second house in a posh area, which will increase her social interaction. All right. To secure her children's future and ensure they don't struggle financially, what product will be needed? Now, this will also come under the love and belongingness. But for the children's future, education trust fund or savings plan that would secure their future and ensure that they don't struggle financially. So this is the Maslow's hierarchy that we have discussed earlier also. The five stages are there, starting from the basic needs, psychological needs, and the self-fulfillment needs. And on its basis, the various products that the banks can offer, this table is also given. Okay. Priya has been a loyal customer of ABC Bank for over 5 years. She appreciates the personal touch in the service she receives, although she's encountered a few issues. Recently, she experienced a discrepancy in her credit card statement. Charges that she didn't recognize were quite significant. Concerned about these charges and a potential credit card fraud, she immediately contacted her bank. However, during this process, she was required to visit the bank multiple times. Which critical aspect of service quality is the bank failing to provide? Tangibles are there. Tangible means that she can check her credit card statement. Assurance, bank is definitely lacking assurance. They're not giving them proper time, like when or whether the issue will be resolved, but they are telling them to visit again and again. So empathy and insurance are there, but value for the customer's business is not there because they are requiring her to visit the bank multiple times, right? So the critical aspect that is lacking here is valuing the customer's time. Based on the service quality dimensions, what is the first action that the bank should take? Immediately acknowledge the issue and assure Priya that they will investigate promptly. Apologize about the inconvenience and confirm that it will take about 30 days to resolve. Suggest that she should have monitored her credit card. Offer a new credit card. So the immediate response should be given assurance, right? Immediately acknowledging this issue and telling them that they will try to solve the problem as soon as possible. A local bank named City Fair Bank has introduced a new savings product aimed at young professionals. Initially, the product sees low enrollment, but as awareness grows, so do the sales. The product becomes widely known by the fifth year. Nearly every young professional in the city has an account with City Fair Bank. However, in the sixth year, a competitor launches a similar account, and the City Fair Bank starts seeing a decrease in the new enrollments. In which stage of product life cycle should City Fair Bank have started to innovate? Basically, in which stage should we take steps to prevent our product from entering into the decline or the death stage? It is the Maturity stage. We try to keep our product longest in the maturity stage where the sales are maximum. How can we keep our product attractive? By adding value. So, adding value, offering, augmenting products, introducing new technology so that the customers they continuously demand the product. Which strategy should City Fair Bank employ to manage the decline stage? Increase marketing spend, discontinue the product, reduce the operational cost, revitalize the product through value additions. This is what we just discussed, right? To keep the product longest in the maturity stage, the banks, the firms should try to revitalize the product. If City Fair Bank launches a new product, what strategy should they adopt during the introduction stage to shorten the time? What happens in the introduction stage? The revenue is less than the expenditure. The reason for this is that customer awareness is very low. So we can do what? We can offer promotional rates, additional benefit for early adopters, reduce the number of features, focus on mass marketing. Focus on mass marketing to the general public so that the customers' awareness increases. The customers become aware of this new product, about the features of the product, and they start using the product. This strategy should be there in the introduction stage. If the decline stage is inevitable, now it is completely sure that we cannot prevent our product from going into the decline stage, what should they do so that the customer's trust remains intact? Abruptly discontinue the product, offer a more modern value added replacement, slowly reduce the product features, increase the fees? No, we are trying to still revitalize. We will try that the customers do not shift from our bank. We will try to retain the customers. We will try to build their trust. So, offering a more modern value added replacement and assist the customers. For example, if the customers are not very much inclined towards the physical branches, the banks can offer them mobile banking solutions, right? On the go services, variables can be offered. This will keep the customers' trust intact. They will continue availing the services from the bank. This is the product life cycle. The stages, the features of the product life cycle that are very important, both factual as well as for the case study point of view. So go through these stages. Now, Bank XYZ has been a formidable player in the banking industry. Historically, they have relied heavily on the core products. Fast forward, a new fintech startup bank emerges offering all services digitally. Bank XYZ is also considering online banking as a special feature. They do not adapt these market changes like instant payment, budget analytics. They witness a gradual decline. What mistake did Bank XYZ make in the context of the product life cycle management? Did they not diversify their core products? They invested too much in the augmented features. They ignored the competition. They failed to recognize. Yes, they failed to recognize that now all the competitors are offering online banking. They are featuring it as an augmented product and they failed to do it. That is why they had to face this gradual decline in the sales. Which strategy should the bank have adopted to prevent losing its market share to neobank? Removed online banking, focused only on offsite banking. They should have added new innovative features to their online banking platform to make it an augmented product again. Now, online banking platform has become an expected product. Every bank is offering online banking, mobile banking, internet banking, right? So, to make it more attractive, new features like offering loans or maybe chatbot so that the customer can resolve their queries, filing application for a new product, this should be done. A borrower has been making timely payments on their credit card for the past 5 years. However, they missed one payment due to a sudden medical emergency. What does this indicate? The borrower is financially irresponsible, they have a strong financial discipline with a minor aberration. The borrower is a risky debtor with a poor credit score, or the borrower must avoid using credit altogether. Basically, defaults can be genuine defaults or willful default. Here, due to a sudden medical emergency, the customer failed to pay. However, in the previous past 5 years, they were making timely payments. So, they have a strong financial discipline with a minor aberration. It will not be treated as a negative impact on their credit score. A customer has applied for three different personal loans and five new credit cards in the past 6 months. What will this behavior, how is this behavior going to impact their credit score? The credit score will increase due to multiple credit sources. The credit score will remain stable. It will decrease due to excessive credit seeking behavior, or the credit score will improve if they close one old credit card. So, actions like over leveraging, over utilizing the credit, applying for too many credit cards, availing personal loans, not having a good mix, all of these lead to a low credit score near to 300. All right, so it will decrease their score. How can we improve our score? By having a good mix, not just availing for too many credit cards, closing the old accounts before opening the new ones. Having a longer credit history is definitely better. To be a safe customer, we should use our credit card limit wisely, not over leverage ourselves. All right. So that is all for today. We have completed all the topics, all the important questions from our module B. More such questions and the concepts we are discussing in the JIB Super Elite plan, which is the all-in-one plan. So now if you want to prepare and your exams are very close now, so join the Super Elite plan. You'll get access to all the courses, MCQ practice, memory-based PYC, case studies, numerical based questions, everything. Also, there's the Telegram channel. This is the QR to the Telegram channel. You can simply scan here and join us. Here, the bank promotion exams by Oliveboard. We are covering the quizzes, the polls, YouTube class updates, important updates, everything you are going to get on the Telegram channel. That is all from my side. Like the video, share the video. If you have any doubts, any queries, you can ask me in the comment section, and subscribe to the YouTube channel because we are still left with modules C, D, and E that we'll be covering in the next few days. For these important sessions, all of these questions are important for your revision. You need to watch these videos on the regular basis and download the PDF. The link is there in the description box so that you can avail the theoretical part for your revision as well. Thank you so much. Have a great day. I will see you in the next video.